In this video, we are going to learn about different types of entry. We will continue of learning different types of entry, but here I want to explain one concept about depreciation. If depreciation is claimed on tax component, then what is the entry? If depreciation is not claimed on tax component, that is GST, then what is the entry? So let us understand one by one. If depreciation claimed as per Income Tax Act 1961 on tax component, then in that case ITC is allowed or not. So answer is ITC is not allowed. Clear cut answer. Let us understand this concept with entries with the help of one example. Suppose Mr. A supplied a machine. Value of machine is 10 lakh. GST at 18%, that is 1 lakh 80,000, and total is 11 lakh 80,000. Now this supplied is made by Mr. A to Mr. B. So Mr. A is a supplier and Mr. B is a recipient. Now in this case, how to record this transaction in the books of Mr. B? So here there are two options with the Mr. B. Either to claim ITC on the tax component, or he has to claim the depreciation on total value. Let us understand both the option one by one. First option, if Mr. B claim depreciation on rupees 11 lakh 80,000, that is value plus tax component. That means, this means what? He is charging depreciation not only on 10 lakh, but he is charging depreciation on 1 lakh 80,000. Here he will not get benefit of input tax credit. So Mr. B cannot claim ITC. If the same situation occurs in the business, at that time what entry can be passed in the books of Mr. B? Mr. B will record the same transaction in this manner. Machinery account debit 11 lakh 80,000 to bank account if amount is paid by check 11 lakh 80,000. So this is the way of passing entry in the books of Mr. B. If Mr. B claims depreciation on 11 lakh 80,000 total value. But if Mr. B claims depreciation on 10 lakh only on the net price of the machinery, he is not charging depreciation on GST amount. In that case, ITC is allowed. So Mr. B can claim ITC of rupees 1 lakh 80,000. Let us take it is a interstate transaction. That means now how to record this transaction in the books of Mr. B? So Mr. B will record in this manner. Machinery account debit 10 lakh, IGST input receivable account debit 1 lakh 80,000 to bank account if amount is paid by check 11 lakh 80,000. This way he can pass the entry in the books of Mr. B if depreciation is not claimed on GST amount. So this is the situation. If you understand both the situation, then it is very easy to pass the entry in the books of recipient.
Computers purchased for office use. The company has not claimed depreciation on GST amount under the Income Tax Act 1961. Amount is 2 lakh. GST rate is 28% and it is an intrastate supply. As it is an intrastate supply, CGST and SGST will apply. And if you make 28% of 2 lakh, then it will come to 56,000, total 56,000. But as CGST and SGST will apply, we will make it half 28%, 28,000 of CGST and 28,000 of SGST. But before writing it, we have to identify whether credit is available or not. This exercise is useful only when credit is available. Otherwise, what we have to do, we have to add total GST amount into the cost price of the computer. Here, the situation is like that. The company has not claimed depreciation on GST amount under the Income Tax Act 1961. This is the situation where company is not claiming depreciation on 56,000, that is GST amount. So whenever company is not claiming depreciation on GST amount, remember, whenever company is not claiming depreciation on GST amount, credit of the GST amount is available. If credit is available, then we will record it separately. So in this case, entry is computers account debit 2 lakh, CGST input receivable account debit 28,000, SGST input receivable account debit 28,000, two party account 2,56,000. Banking services for business purpose 40,000, 18% of GST amount and intrastate supply. So it is nothing but banking services for business purpose, and as it is not a for personal purpose, so it is not blocked under section 17 subsection 5. And whatever banking service is paid and whatever charges you business, that is company, has incurred for availing that banking services is allowed, credit on those expenses is allowed. So here simple entry is banking service expense account debit 40,000, CGST input receivable account debit 3,600 as it is an intrastate supply, SGST input receivable account debit 3,600, to party account 47,200. Next one, manpower supply services amount is 44 lakh, GST is 18% and it is a interstate supply. As it is a interstate supply, then IGST will apply. Here manpower supply services is there, so credit is available. So entry is manpower services expense account debit 4 lakh, IGST input receivable account debit 72,000, to party account 4 lakh 72,000. As manpower supply services is a expenses, and all the conditions of section 16 has been satisfied in this expenses, so that is why whatever GST paid, credit is available, so it is recorded separately into the business, and credit is available on these expenses. He can take the credit of this IGST at the time of outward supply. Raw material purchase for manufacture of final product amount is 15 lakh, rate of GST is 12% and it is interstate supply. As it is interstate supply, GST will apply. Now, as raw material is purchased and it is going to be used for the manufacture of final product, so it is directly used for the outward supply. So naturally, credit is available, and as credit is available, we will record it separately. IGST will be recorded separately. So entry is purchase account debit 15 lakhs, IGST input receivable account debit 1 lakh 80,000, to party account 16 lakh 80,000. Next one, telephone oblique mobile services telecommunication 90,000. Rate of GST is 18% and it is interstate supply. Whatever expenses incurred and whatever GST paid, it is allowed, as it is one type of service availed by the company, and credit is available because it is directly going to be used for the business purpose, to expand the business only or to enhance the business. So that is why we can say that credit is available, and as credit is available, so we can record it separately though. So entry is telephone service expense account debit 90,000, IGST input receivable account debit 16,200, two party account 1 lakh 6,200. Now next transaction is Purchase of trucks for transportation of own raw material. No depreciation claimed on GST amount. 15 lakh. Rate of GST is 28% and intra-state supply. For passing entry, we should know whether credit is available or not. Here, it is a purchase of truck, that is purchase of motor vehicle. So just I am revising about section 17. So if company has purchased motor vehicle and capacity of that motor vehicle is less than or equal to 13 passenger, then whatever GST amount paid on it, that is blocked. That means it, whenever any purchase, say for example car is purchased for transportation of or for taking their officers from one place to another place, then credit is not available if sitting capacity of that car is less than 13 person or passenger. So what entry can be passed in that situation? Whatever GST amount is there, that will be added into the cost price of a car. Say for example, cost price of a car is 10 lakh and GST is 1 lakh, then entry is car account debit 11 lakh to party account 11 lakh. That can be a entry. But there are certain exceptions. If any vehicle is purchased for providing training, for transportation of passenger, and any vehicle purchased for transportation of goods or finished goods from one place to another place, then we don't have to look for the sitting capacity, and whatever GST paid in that situation, credit is available. So that is why here it is a purchase of truck and it is used for the transportation of raw material and no depreciation claimed on GST amount. Here also depreciation is not claimed. So that is why GST amount will be recorded separately into the books of account and credit is available. But if depreciation is claimed on GST amount, then it will not be recorded separately. It will be added into the cost price of the trucks. So that is why in this situation, entry is vehicle account debit 15 lakh, CGST input receivable account debit 2 lakh 10,000, SGST input receivable account debit 2 lakh 10,000, two party account 19 lakh 20,000, health services for its employee fitness. So employee has incurred expenses on health services of its employee fitness. Amount is 1 lakh 12% GST and intrastate supply. So here employer has incurred expenses on the health of an employee, that is fitness of the employee, and this expense is not incurred by the employee under a statutory obligation. So that is why whatever GST paid on it, credit is not available. So that is why in this situation it will be added into the cost price of the expenses. So entry is employees health expense account debit 1 lakh 12,000 to party account 1 lakh 12,000 as health and fitness services is totally blocked under section 17 subsection 5. Credit is not available for the employer, and so that is why it is not to be recorded separately.
Reverse charge mechanism. So in that case, how to pass entry? For example, lawyers fees. Amount is rupees 10,000. GST rate 18%, and it is intrastate transaction. You have to write down professional fees account debit, CGST input receivable account debit, SGST input receivable account debit, as it is an interstate transaction, so CGST and SGST will come, and you will get the credit for the same also, so that is why it is input receivable. To CGST output payable account. Why CGST output payable is also recorded? Because recipient has to deposit this tax with the government, so that is why it is liability is created here. To SGST output payable account. To bank account or party account. If it is paid by check, then bank account. If it is paid to some party, then name of the party will be written. Here amount will be here recorded 10,000. 9% CGST, that is 900 will come. See, here also 900, 900, 900, and in bank column 10,000 will come. Now this is the first entry. In this case you have to pass the second entry also. That means what? You have to create the liability and then you have to discharge the same. So CGST output payable account debit, SGST output payable account debit to electronic cash ledger account. 900, 900, and here 1800 will come. If it is IGST, then you have to make changes accordingly, but this way you have to discharge the liability. When you will get credit, credit is available only when you discharge the same. This ITC is available, students. Remember, ITC is available, but when it is available, when you discharge the liability through electronic cash ledger. सो आपको जब तक ये सेकेंड एंट्री पास नहीं करोगे आपको इसका क्रेडिट नहीं मिलेगा.
Now next transaction, Goods Transport Agency Service, GTA, RCM, transportation of goods services. In reverse charge mechanism, special kind of entry can be passed because in reverse charge mechanism, GST amount is to be paid only through cash ledger. That means in first stage credit is not available. GST, the person who is a recipient has to deposit GST amount to the government and then later on he will claim the credit if he is a dealer. So here entry is freight expense account debit, CGST input receivable account debit, SGST input receivable account, that is RCM account debit, two party account, to CGST RCM payable account, to SGST RCM payable account. Here CGST input RCM account debit. Why CGST input RCM account debit? Because it is a reverse charge mechanism and credit is available, but credit is not available to the first stage. First of all, person has to pay this GST amount to the government, and then once after paying the GST amount to the government, then he will claim the credit, because recipient is liable in this situation. So entry is little bit different. So CGST input receivable account debit, SGST input receivable account debit, and same time it is a liability of a person also. So that is why it is to be credited to CGST RCM payable account, to SGST RCM payable account. So why it is payable? Because person has to, that is recipient has to pay this 5,000 plus 5,000 to the government through cash ledger, and then later on input credit is available. So that is why CGST RCM payable account second entry we have to pass along with this. So whenever there is a reverse charge, you have to pass two entries. CGST RCM payable account debit 5,000, SGST RCM payable account debit 5,000 to bank account 10,000. Because RCM liability has to be discharged by cash ledger only, and ITC cannot be used right now. So that is why you are raising the liability and you are paying the liability at the same time by using cash ledger to bank account. You can write down to electronic cash ledger also instead of bank account.
Like, share and subscribe my YouTube channel for more videos like this.